Welcome to Financial Jaga Jaga. So a lot of people have been asking me about the Russia-Ukraine crisis and what I think the impact will be on the financial markets. So I'll just like to start by saying that whenever something happens, you are likely something bad happens that might affect a country, a developed country. You are likely going to see ripple effects in that country as well as in even countries that are not so close to that country. So I think I'll start by talking about the stock market. Now, the stock market is a place where companies go and they are listed there, and then you and I can go buy the shares of those companies. So it's like stock exchange, right? Most countries have this platform. So people hold stocks. Stocks are things that give you ownership rights in those companies, and then the company might pay dividend depending on their policies and all of that. But yeah, let's just get straight to the point. Now, in a situation where something bad happens, stock market is really sensitive to crises like this, because first of all, the stock market is one that is considered risky, relatively risky, right? Because it's a long-term investment and all of that. So you are holding value, you believe in that company. However, if something is happening in that country, it means that the possibility of the company surviving in the long run will be threatened. So the normal investor reaction is to just sell off their shares. So for example, I've invested in some companies in Ukraine, or let me say Russia, and then in light of all of this, I'm afraid, because for me to buy a share of a company means that I have some level of belief in the potential of that company to succeed in the long run. Because stock is not just an investment that of course there are people who buy the potential to sell, but even those people, they buy because they believe that that company is valuable, and in some years time or in some months time the price will increase, so they can sell at the higher price, right? So in a situation where you begin to see the environment threatened, there's a threat of a huge conflict, right? You are thinking to yourself, I don't know how bad this is going to I don't know how deep how bad this conflict is going to escalate. There's something called flight to safety. You immediately start asking yourself, is it worth it? Is it worth taking the risk? What if tomorrow there's like a total shutdown of the economy? My money is still in this company. This company is obviously going to be affected. So most investors immediately start reacting by selling off their shares, right? And then you then see the law of demand and supply come to play, because as people, one person sells, second person sells, more people start selling. There's also the head mentality where when you start seeing everybody selling, you yourself, that you probably did not have that fear before, you're saying, what's happening, why are people selling? And then you start telling yourself, I think I should sell too. So that happens typically. Stock market reacts sharply to things like instability in the economy, and maybe things like inflation, like in an efficient market. You should see those impacts, you should see the impact of all of those negative news. So this is the case of the Russia-Ukraine crisis. I mean, if you look at those markets, you see that the stock market really took a hit because people were selling off, right? So what then happens is, when those stocks are falling, as people are selling, the prices are falling. So it's just law of demand and supply. If everybody wants to sell, off their everybody wants to sell off their water. I don't know what to use, but everybody wants to sell off their property, right? The value of that thing declines. So that's the same thing with the stock market. Everybody is dumping their shares because I want my money to be safe. I don't want my money to be lost in all of this hula baloo. At the end of the day, you find the stock market taking a huge hit. There's like a drop, right? Now the tricky thing about the stock market is, or when this sort of thing happens, is that it's not just the countries. So for example, if I see this impact in Russian market, I'll be like, yeah, I understand it. But then when you see other stock markets now taking a hit, where you're seeing a decline in share prices, for example, the US stock market, the S&P 500 has lost value year to date, right? Although I cannot attribute the total loss in value to this conflict, because already before this conflict started, there were already talks about rising inflation in the US and the stock markets were already taking a hit on that. Like I said, in efficient markets, things like inflation would affect. You see the impact of all of that. So when this happened, we're also seeing the impact on the S&P 500 US stocks basically. Now there's a trick in this. The trick is that some people might just be selling off because they are overreacting, right? It might just be a thing of fear, right? It might just be an overreaction. I'm not saying it is definitely, I'm saying it might be an overreaction. So that's where you as a person will then look at the situation and say, wait, the way this market is reacting, everybody's selling. Is this not an overreaction? And if you think it's an overreaction, that might be a good time to buy those shares. I'm still talking about the stock market now. That may be a good time to buy shares because you're getting it at very low prices. Now I'm talking about these markets where they're reacting to all of these things. Now